So I'm over at Silver Doctors right now. It's an article from August of last year, and it's Jim Sinclair, Banksters now manipulating the metals to the upside. All right. So remember all the stories we heard about banksters manipulating gold to the downside? Well, Jim Sinclair said that, hey, they manipulate to the upside. And I was told this by one trader. I'm not going to mention his name. He said, dude, they manipulate to the upside, downside, and sideways. That's how they operate, and that's their MO. And this got me thinking about ETFs. And this particular trader said that, hey, ETFs manipulate price of gold to the upside. I was thinking to myself, what the hell is this guy talking about? So I look at the data. I've been thinking about this for a little bit, and we could look at from 1982 roughly to 2004-ish. You could go to like to November 2004. The price of gold was $400 there, 400-ish, right after Reagan cut taxes and all that fun stuff, made the economy boom, while gold stayed constant for 32 years, right? What was the event that happened on sometime in late November? I think it was November 19th, 2004. I don't know where the hell I was. I must have been somewhere in college waiting for Thanksgiving break. But an important event happened this date that no one really remembers, and that's when the GLD was first offered to be traded in the markets. And look where the price of gold got from 2004, November 2004, to even right now, right? So if you do the math, right, what is it now, like 1360 minus 439? So that's a 200% move to the upside, right? And if you want to look at the top, right, that's a huge move. So some people may say that, hey, guess what? With the addition of the ETF, this was one of the reasons that made the price of gold go up. Some people will say, hey, that's manipulation. I wouldn't say that that was the sole reason why you saw a huge move from 400 to 1900. I mean, if you look at it from an unbiased perspective, why did the gold price go up? Number one, not quantitative easing, but interest rates way below the market rate. You had negative real interest rates. So if you have negative real interest rates, what happens? Well, simple. Sophisticated investors are just going to place their money in assets that are going to protect themselves. So they're going to take their fiat and invest it A, in the stock market, B, in commodities such as gold and silver. Larry Summers wrote a quite complicated paper on this, which Bill Murphy always references, okay? So negative real interest rates, tax cuts, got the velocity money going, so that's why you could say gold prices went up. But notice that when the economy was thriving, when you had interest rates a little higher, right, gold prices went nowhere. And some people say, hey, he was manipulated, right, to the downside. Now, notice that for 32 years, gold prices were constant. Then all of a sudden, you just saw it skyrocket. You saw huge moves, right, beating the Dow. So this is something really interesting. Some people may say it's upside manipulation. What I'm saying is that there were many reasons that made the price of gold going up from 400-ish to 1900-ish, and now 1300 to the downside. One of the reasons that it also went up, my opinion, to be unbiased, is the introduction of the ETFs. Some people say, hey, it's rigged to the downside. Yeah, but it's rigged in all forms and directions. Long story short, I don't know what the true price discovery of gold and silver are right now, based on all the shenanigans going on in the marketplace. But what I can tell you is the ETFs, the derivatives markets, creates more volatility than what would have happened in the past, just based on observations. Anyways, guys, thanks for listening. Comment below. I'll talk to you later. Bye.